Ladies and gentlemen, Moneybag 73 presents tonight's heavyweight bout. After its biggest two-day drop in 30 years, gold is now off about 25% from its 2011 nominal high of $1,920. Some people believe that this is a good sign for the economy. The dollar looks strong, the stock market's making all-time highs, and the real estate market is making a strong comeback. However, the fundamentals for owning gold have not changed, and the individuals who possess the power to see the forest for the trees are taking advantage of the current sale prices. In this corner, wearing gold trunks, we have Gerald Celente, publisher of the Trends Journal and recognized as one of the top trends forecasters in the world. And in this corner, wearing the black trunks, is a host of the Kudlow Report on CNBC, Lawrence Allen Kudlow himself. Worthy of note, Mr. Kudlow began his career as a staff economist at the Federal Reserve Bank of New York. He worked in the division of that bank that handled open market operations, which involved buying and selling bonds to help control inflation and interest rates.
So we know gold has plunged about 25% from its peak in the middle of 2011, and it got crushed in recent days. I say that's a good omen for the economy, the dollar, and even the stock market. I like the sinking gold. Look, there's no end to the world scenario. There's no end to the world dollar. There's no end to the euro. There's no inflation. And energy independence could curb our trade deficit, bolstering king dollar, and bring gold down even more. Remember the fabulous stock market and economic prosperity of the 80s and 90s? Remember? Gold was crushed then. Maybe we're moving in that direction right now. Think of it.
This is the biggest hit gold has taken in 30 years. And I was back there 30 years ago. My first buy of gold was in 1978 at $187.50 an ounce. So I remember it well. There's no comparison between what's going on now and what went on then. What I'm saying was there was no global economy. The gold and silver markets in those days were very thinly traded, and mostly the trades were coming from the United States, somewhat from Japan, and a little bit in Europe. Totally different time, totally different era. There is no comparison. Why have I been buying gold? And you could go to our website, trendsjournal.com. You could see my forecast in 2001 when I said that it was the beginning of the gold bull run. Gold was around $275 an ounce. I make it very clear, I'm in gold for my golden years. I'm not a speculator. People are getting blown out of the markets because of their margin calls. That's not what gold is about.
The big inflation never came. The total collapse of the dollar never came. In fact, the dollar against broad trade-weighted indexes is about where it was 4 or 5 years ago. It's gone up and down, hasn't really moved. This pumping of the money supply, most of the banks didn't use the reserves, and the inflation rate, heck, today, I think the year-on-year CPI, 1.3%. In other words, a lot of the doom and gloom, collapse of the dollar, collapse of the euro, soaring American inflation, therefore collapse of the dollar and collapse of the American system. That kind of pessimism and catastrophic pessimism never really happened, and now gold has completely lost its leg because it traded on that catastrophic pessimism.
I'm buying gold for fears of devaluation of the paper currencies, and that has not stopped. Not with QE1, not with QE2, not with QE3, not with the Bank of Japan announcing they're going to be dumping in 1.4 trillion yen to keep the Ponzi scheme going. Not with ongoing monetary transactions or long-term financing operations from the European Central Bank.
There's so much risk avoidance by companies, by individuals, by banks. There's so much deleveraging going on that what Bernanke does is being swallowed up by people who are cash hungry. And the gold argument, which might have had merit years ago, doesn't seem to have merit anymore. It's a different ballgame.
The value of your currency has gone down. And the Americans, the Europeans, the Japanese, and even the Chinese are all debasing their currencies by their unlimited supply of printing more of them to keep their economies going. So I want to make this 100% clear. I am still in gold. I am not going out of gold. The cost of production of gold is what? $1,200 an ounce? So how much lower can it go? Who knows? I also believe totally, with every ounce of blood in my veins, that the markets are being rigged. A conspiracy theory? No. As Dr. Paul Craig Roberts has pointed out, they're rigging the bond markets in front of our eyes. As I mentioned, the Japanese, they're now buying their bonds. The Europeans, they're buying bonds. The United States with the QE3, $85 billion a month in buying mortgage-backed securities and treasuries. They're rigging the market. LIBOR. 5 little letters that everybody's forgotten. They rigged the market. That's not a conspiracy theory. And then you go back and look what happened when gold started going down. First, the information came out that Cyprus was going to be selling 10 tons of gold. And now it's neither confirmed nor denied.
I remember the 80s and 90s. Gold collapsed, as you recall. Good for stocks, good for the economy, good for jobs. When gold goes down, I think the economy goes up. And I'll tell you one more thing. Energy independence. Just think of this. It's going to eliminate our trade deficit. That's good for the U.S. dollar, and that's bad for gold.
And now they're saying, well, if Cyprus had to sell gold to keep their country afloat, to pay off their bad debt as they're going down the tubes, then Italy, who's also holding large gold reserves, Spain, Portugal, and others with large gold reserves, they too are going to be dumping it into the market. So that's how they got the panic going. Then all of a sudden, out of nowhere, the Bundesbank comes out. Oh, yeah, the Bundesbank bandits come out and say they're readjusting their forecast on gold and downgrading it. How did this happen? Who are they? And then immediately following, the Goldman Sachs gang. All of a sudden, the Nostradamus, they come out with their, right at the same time that they're downgrading their purchases of gold.
You know, the peak in gold was in, September 2011. It had been gradually going down. Look, you may have had Cyprus gold selling for their financial difficulties. You may have had tax selling in the stock market. You never know what the trigger's going to be. But I think the gold trend is lower. This is the second great gold rally in the last 40 years. The first was in the 1970s. This was the second. It is over. And the fact that the gold rally is over, in my humble opinion,
let's put this back into perspective. I'm watching all of these shills on CNBC and the rest of these money shows, Bloomberg, etc. And what do they all say? Well, you know, gold is crashing. Gold is going down. Hey, how about the stock market? Go back to 2007. What was gold selling for back then? $750 an ounce. Oh, the stock market hit its peak at what back then? 14,000. What's it now? Yeah, about 14,500, 600. Wait a minute. Adjusting for inflation, it should be at least about 15,600. And what about gold? Let me get this right. We're selling about $750. And now, even with the downdraft, it's hovering, you know, a little below 1,400. Who has the better deal here? Who made out? That's the way I look at it.
Look, gold down, stocks up. Gold down, economy up. Invest in something that's more productive. The gold thing is an insurance policy for the end of the world. There is no end of the world coming. That's my key point.
They're going to print more money. And the more money they print, the more value gold has. And finally, if anybody thinks that gold isn't golden or silver isn't precious, call yourself a Greek Cypriot, and your banks are closed for almost 2 weeks, and you can't buy anything because you have no money. But boy, oh boy, if you had some gold and silver coins, you think you could buy what you needed, and you think you could get a great price for it? So that's the way I see it. I'm in gold, and to me, gold is still golden.
The worst is over, things are slowly getting better, and the wisdom of the USA can solve these problems.
So as you go around the world and you look at the problems, what's going on in Spain and in Greece and in Portugal and in Italy? They still don't have a government over there. The financial crisis is keep eating up. Every couple of months, the IMF downgrades its forecast for global economy. It's not going to get better, neither economically or geopolitically. And those are the 2 reasons why I hold gold: geopolitics and economics.